Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. So let's take a look at the week that was in the stock market. And we can see that all three major indexes, the Dow Jones, the NASDAQ, and the S&P 500, all fell for the week. As a matter of fact, the market was down 2%, and this was the biggest weekly decline in 2012. What brought about this decline? For the most part, it was worries over the health of Spain that have come back to the forefront. On Friday, the European Central Bank released their borrowing numbers, and it showed that Spain had increased its borrowing from, I believe it was around 150 billion to up to now like 220 billion. So in March. So their borrowing from the European Central Bank had increased $50 to $7 billion there in a month. So that raised some concerns on Friday. We did start off our earnings seasons, and we had Alcoa, Google, JP Morgan, all beat their estimates. And then we even had Google announce plans for a 2-for-1 split. Now, what's interesting about this is that the true reasoning for this split is that the original owners, Larry Smith and Eric Smith and Larry something, these original owners of Google, creators of Google, wanted to make sure they keep their voting power. And so this is really a strategy to make sure that they can still have control of Google. It's kind of interesting. As far as the economic front, we had the Michigan sentiment fall short of estimates, and then the Fed Vice Chairman, Janet Yellen, suggested that the rates will stay low through 2015. Right now they're saying 2013, 2014. And what that did with those comments is spark the, could this mean more quantitative easing? And so the market did actually respond well to that, but as you see again, the market did end the week down 2%. As we move on into next week, we do have some more earnings that will catch people's eyes. We've got Citigroup, Goldman Sachs, and IBM, all big companies, all can move the market. IBM usually leads to good earnings and a good day in the market for the past almost 10 years. As far as economic data, we do have Bank of Canada, especially for our forex traders. You want to pay attention to that. Philly Fed on Thursday, and then the Empire State Manufacturing there on Monday. But I think that Citigroup and Empire State Manufacturing will start the market off fine for Monday. And, of course, any additional news coming out overseas from Spain. And, again, our pigs, Portugal, Italy, Spain, Greece. Those are the ones that can pull the market down if their debt crisis continues. All right, so we're starting off here with our sentiment leaders, the dollar, gold, and crude oil. The dollar has found its support around 79. We did bounce here, going up. Now we're having trouble getting above 80.25. So still sideways price action. Haven't made its way all the way back here to 81 again. But with the Eurozone and the Spain debt crisis, we might see some strength with the dollar, especially with the euro dollar. Of course, the issue is going to be with that talk of keeping the rates low and quantitative easing would be weak for the dollar. So we'll see how it goes. But definitely looks like we're in a range. A couple little blip outs here, but we seem to be holding on to 79 as support for the dollar. So as we consolidate for the dollar, what does that mean for gold? Well, gold is also consolidating a little bit. it was a little bit weaker, and now here it is trying to hold on to this 1660 price level. We'll see. I mean, all of our moving averages, 10, 20, 50, have broke below the 200 moving average, so that's a little bearish. That's sort of the death cross, as they call it. So that's weak for gold. Of course, gold had that big run up all the way up here to 1800. So we'll have to see where gold is. So gold, I would venture to say it's in an uptrend, but it's sideways to the long term, but sideways to down here for the short term. And finally, crude oil for our pocketbooks at the gas pump. It's holding on to 102 as support. Holding on to 102 as support. We really needed to break down here to really do anything for our pocketbooks. Okay, so here we are looking at the S&P 500 on a daily chart, and we'll come on in here and just kind of zoom in here on 2012. You can see how beautiful the chart has been. But what's interesting is as we started to fall down here, we kind of peaked out here 1422. You see that we're starting to base at this trend line right here. We even broke the 50 moving average a little bit, but we're finding a little base here at this trend line. And so what I'll do is zoom out again, make sure you see where that's coming from. And again, here's those October lows, and we connected it with this little swing low right here in November, and ta-da, that's where we are pausing today. Again, October lows, here's some November lows, and then that's where we're pausing right now. Now you guys know, I love it when a plan kind of comes to work. As they used to say in the A team. So I love, that's why you see trend lines over my chart, and sorry if it makes it confusing for you. But I think it's important as traders for us to recognize these key price levels where traders battled it out in the past and sellers and buyers switch who is in control. So, here we are. We're starting to pause. And again, this always leads into a wonderful conversation of control and catalyst. Now, we do have some catalysts. We have earnings. This past week, we didn't have that much. And then the earnings, although they beat, they were over cast by the Spain debt crisis. So we do have some more earnings. So if earnings continue to be good, maybe we'll be able to move forward higher. But certainly any pullback is healthy. And we can see finally our indicators are getting out of overbought and starting to finally head down. So on our daily, we're finally getting around towards that oversold price level. Now what about on a weekly? On a weekly, remember what we said? We have our first weekly, our biggest weekly gain in 2012. We can see this big red candle, and that was predicated by 3 dojis. And again, we talked about this. This showed that indecision starting to come into play when we had 3 side-by-side dojis here on a weekly. And then again, you can see us bouncing right off of that uptrend line. And our indicators are just now starting to come out of overbought here on the weekly. We'll zoom out one more time to the monthly. And we see, zoom on in here for us. We see this beautiful uptrend, and then we now see this red trend. So again, this is also concerning on the monthly chart. Weekly chart, we saw that breathing, and now we're starting to get some doji, some same size candles here on the monthly. Also possibly indicating a pullback, of some type sort. We are finally coming out of overbought here on a monthly also. So all of that, our longer time frames have much more room to go to the lower side. Now, our dual time frame agreement is if we were if these indicators were heading up on a longer time frame, then that daily, when it switched back to the upside, we would have a trade. But our longer term time frames are heading down, so that's what's concerning about that. Now we'll switch over to the NASDAQ. And one thing we'll see here on the daily is that again, why do I like drawing lines? We see here again, we drew in this line based upon this little swing high here, little gap here, and where's the market positive for the NASDAQ? Well, notice first of all, the S&P broke the 50. NASDAQ's trying to stay above it, but we're also trying to defend this 3,000 price area. So we'll have to see. Our indicators are getting ready to cross below, our moving averages are getting ready to cross below the 50 moving average if we were to go lower. On the daily, just like the S&P 500, our indicators are getting down towards that oversold price level. We'll come over to weekly. We'll zoom on in. Again, we can see sort of our doji. We talked about this being an even star, and now we even got down here, and again, resting at 3,000. So we'll just hold up a support. Here, our indicators on the weekly are just now coming out of overbought, so there's plenty of room to go lower for that. Whoops, wrong one. Finally, on the monthly, zoom on in. Again, there's that side-by-side, same size candles, and our indicators coming out of overbought. So, we're looking for a catalyst. We can stay overbought if we need to, but our longer time frames are indicating some sort of a pullback may be in play. Okay, so we are looking at the daily chart of Apple, and even the greats must fall. You can see this pullback that has come down here for this past week. Certainly, those people who have been chasing Apple are going to start panicking. If we break 600, you may see some panic selling coming down to the 50 moving average. Because obviously people have been chasing this one for a while, and I would say 600 is our next area of interest as far as price as we're coming down. Obviously still in an uptrend, still very bullish. We're below our point of control here, which is at 625. Little volume here if we can get above 610. But again, what's going to be our catalyst? Well, Apple has earnings coming up. What about Amazon? Amazon found some life, was actually going opposite of the market for a little bit, but now it's starting to go right back into this range. We had a little pop out, and now it seems to be right back in this range. So although uptrend for Apple with the pullback, in action right now. Right now we're just saying we had a blip out of this consolidation, so still sideways for Amazon. What about Google? Well, of course, Google had its earnings right in here, so we had this nice little gap up. And look at this Friday candle, about $25 just on this one candle here. Will 620 hold up? 618 hold up in support? We're about to find out. And so we also notice we have another area around 600 that could be identified as support if we break 620. So that's what I'll be watching. I'm just going to stay sideways for right now for Google, and we'll see what happens. It's looking like the market. Goldman Sachs came back to life after this huge downtrend. Finally popped its head out of resistance, and now it's trying to hold on to that resistance. So this 118 it got itself back up above it and then fell down. And of course, as we know, as the banks go, so does the market. Here we can also watch 112 as the next area of interest. If we do stay below 118, we'll watch 112. We've got our 200 moving average here, also here to watch. And I think we're going to have to stay sideways right now for Goldman Sachs. IBM. Well, we said IBM has earnings this week. Don't forget Goldman Sachs has earnings this week. Took off here. Now starting to level off here at 200, 202, right above the 50 moving average. I'm going to say sideways. Obviously, it's in an uptrend, but sideways. Here with Intel. Intel's one of the few that's actually closing closer to where its highs than to the recent low. So sideways up here on Intel, looking very nice. So they have earnings coming up. Next up is MasterCard. MasterCard also closing at the highs. Of course, people are in debt. So we'll see if we can break 440 here. Close above 440, and we might see this continuation. Obviously in the uptrend. Netflix, like Goldman Sachs, found some life, but has stayed below the 200 moving average and has stayed within this range. So we come all the way down here to 90. We may want to start looking at buying, but sideways for Netflix. And finally, Priceline. Priceline, like Apple, took off, now pulling back a little bit, trying to hold the 20 moving as its support level. You might say that there's some support here around 710 or the psychological barrier of 700, but definitely sideways up for price line. As we come to our education spotlight, we want to talk about what it is exactly that bad traders do that good traders avoid, or what do winning traders do that is different. And the basic thing is what we're all about here at Move Over Mike, and that is high probability trading and avoiding the common pitfalls. And that's what we're going to be talking about the next couple of weeks here, is what is high probability trading and what are those pitfalls. And in simplest form, it's all about rules-based trading and avoiding fear-based trading, rules criteria-based trading, and avoiding emotional trading. So it's not about some magical trading strategies. There are no magical trading strategies. What it is having the discipline to implement that trading strategy, and more importantly, recognizing that whether or not that trading strategy is right for you. It could work perfect for someone else and be horrible for you. And that's why we spent months talking about trading plans. And now we're talking about high probability trading. So I hope you'll come along and join with us as we talk about what is high probability trading. And again, some of those common pitfalls, those fear-based emotional tradings, pitfalls that we can avoid as traders. Again, please comment, like, subscribe. Tell us what you like. Tell us what you want to see. Any new videos that you want to see, we're going to put a couple out this week. Let us know. As far as our products, we're really breaking it down to 3 things that we can offer for you, and that is our coaching. Let us work with you one-on-one. Let us bring you to high probability trading. Show you how to build that foundation. Help you build that high probability trading system that works for you. And then give you the trader's mindset to implement on a consistent basis. And if you don't want to be bothered with that, we do have our managed forex accounts where we have full transparency, individualized investment plans where we can help you put our expertise to work. And then we do have this system that reveals a story about the number of reasons why most traders, and again, that kind of goes to what we're talking about right now. What do good traders do, the bad traders do not. The number one reason why people are losing money in trading, and a simple trading technique to help you lock in those profits. As we said, it all comes down to having a trader's mindset, to recognize, implement, and then have the discipline to follow the proper trading style for your capital, for your risk tolerance, and for your peace of mind. We'll help you do that. Thanks, guys, and I'll see you next time.